Hey, it's Joe Crump. This is the second video that I'm doing on for realtors, where we talk about how to get more business as a realtor. But I've got a question here from Charles Matz from Wilmington, North Carolina. Charles asks, I have a property listed in Wilmington for a little over $1 million. It's 4,400 square feet with a number of updates, located on a marsh land frontage. Is that good? I guess it is, with water access. In this market, my questions are, since the present owners have collected many items of furniture, bric-a-brac over the years, they're reluctant to store all that stuff to expedite a sale. How can I convince them that they should do so? Also, they really need to net over $1 million, so they can't reduce the price too much, even in the down market. Since price reduction is not an option, what other sales tools may be effective? These are my questions. I'm doing the ordinary stuff like MLS advertising, homes and land magazine advertising, web-based advertising to local realtors, open houses, etc. These are not really related directly to real estate investing, but to real estate sales, so I'm not sure you're going to feel these types of questions in your videos. Well, no, I think that this is a good question, and it's a good question for real estate investors as well, because what you're not understanding is something pretty fundamental here. All the stuff that you're doing, all the magazine advertising, the web advertising, the homes and land, the MLS, all that stuff, all the stuff that you're paying for, the reason you're doing that is to get more leads. It's not to sell the property. You may think it's to sell the property, your seller may think it's to sell the property, but the main purpose of it for any realtor who understands marketing is to get more leads so that they can find more buyers and sellers. Most of the people that respond to these kind of ads don't buy the property they're responding to. So don't go at it with that idea in mind. Go at it as, how can I monetize these ads to get other business? And the big thing that I think that you're missing here, and I don't mean any disrespect here. You may have been a realtor for a long time here, but and you probably already know this on some level. The only thing that matters is price. Nothing else matters. Location doesn't matter whether it's on a marsh, doesn't matter if there's a bunch of junk in the house, doesn't matter what kind of condition it's in, doesn't matter what location it's in, none of that matters. All that matters is the price. Price can fix anything. It's not location, location, location. It's price, price, price. No matter what. Now location will determine what the price is. If you buy in California, you're going to pay 4 or 5 times as much as you buy in Indiana for the same size house, same condition house, all that stuff. So location does make a difference in the price, but the price makes a difference in whether or not it's going to sell. And you have to price it based on the market. I'm going to give you some statistics here, and these are very important statistics for investors or real estate investors to understand, so that they can help people understand how to price a property, and so that you can understand how to price a property. And I'm going to give you some statistics, and I use this as a realtor because I was a realtor for 6 or 7 years, 8 years, something like that. I've had a realtor license since 1986. Still have a broker's license. I don't use it. I don't list property, but I used to. And I used to tell this to my sellers when I had a property listed, because I wanted them to understand that price was everything. Didn't matter that they didn't want to put their junk away. It's okay. You don't have to put your junk away. You just need to lower your price. That got them to put their junk away, by the way. It didn't matter, that you need $1 million. Nobody's going to give you $1 million if the property's not worth that. They don't care what you need. All they care about is the price. So let me give you these statistics and these are national statistics from the National Association of Realtors, and I think they're very effective. And these are 4 properties that are listed in the MLS, which is the only way to sell a property for cash, by the way. You don't sell it for sell by owner. You don't sell a property for cash for sell by owner and expect to get full price. So you put it in the MLS. 1/3 of all the houses that sell, 1/3 of all the houses in the MLS that are listed in the MLS for sale do not sell. They become expired listings. So that means that for 3 that go in, 1 doesn't sell. It's been on the market for 6 months. Now, for the properties that do sell, 40% of those sell within the first 30 days. And they sell for 97% of asking price. So if they're priced properly, they're going to sell very close to asking price within 30 days. Now, the second 30 days, only 7% sell. The third 30 days, only 7% sell. The fourth 30 days, it jumps up to 20%. 20% of the properties sell after 90 days. Why is that? It's because, on average, people lower their price after 90 days. So that tells us right off the bat, if it's priced right, it's going to sell real close to asking price, and it's going to sell within 30 to 45 days. If it's not priced right, it's not going to sell at all. Nobody's even going to make a lowball offer on the property. So that brings us to a concept called threshold pricing. People look at, when buyers look at between 18 and 23 houses before they buy a house, on average. So that means that your house is competing with 18 to 23 other properties. Now, these aren't just random properties they're competing with. They're competing with comparable properties in the same area, in the same price range. So if those other 18 or 23 properties, if one of those properties is a better deal than what you've got, then that property is you're going to help sell that property. You're going to help your competition because you priced your property improperly. So the idea is to try to get within the threshold so that you're competing with a bunch of properties that you can beat. So let's take an average price on a property. Let's say it's a $150,000 property. And this goes for, doesn't matter if it's a $500,000 property or a $150,000 property, just a nice round number. Say you got a $150,000 property. You're competing on average with people between 145 and 150. Those are going to be your main competition. If you can't beat those, if you don't sell your property, 30 days, 45 days goes by, it's not sold, you need to drop your price down to 145. You don't drop it to 147 because you're still competing with the properties between 145 and 150. If you drop it to 145, now you're competing with properties between 140 and 145. That's threshold pricing. And that's making sure that your property is listed and put it on a round figure. Always list it on a round figure. 145, 150, 155, 175, 200, 225. Always put it on a $5,000 number, a round figure, because that's the way agents pull up listings. They'll pull up, well, show me everything between 125 and 150. Show me everything between 250 and to 350. They're going to be on round numbers. So don't put it at 149. Because then you won't get pulled up in the search between 150 and 175. You only get pulled up into searches, the 125 to 150. So you want to be in as many searches as possible. So anyway, these are such important ideas when it comes to pricing, and it'll help you with your listings. If you're an investor, it'll help you talk to your sellers to help them understand the value of a property, and it'll also help you understand when you're trying to sell your property why it's not selling. It's always the price. All right, thanks now. Bye-bye.